does this meeting and what's come out of it between Angela Merkel and Li Keqiang suggest that we might not actually see less trade at the end of all this, just a shift in how the trade patterns emerge?
Right. Well, certainly both China and Germany are trying to keep the world trade arrangements that exist now up and running. But this relationship, certainly for China, is no replacement for the United States. China ships nearly 6 times as much of its exports to the United States as it does to Germany. So certainly not a replacement. For Germany, the story is slightly different. In fact, Germany exports almost as much as it does to China as it does to the U.S. So this helps cushion any blow there, more for Germany than China, but no one can really forget about the U.S. After all. It's the world's largest economy, and the old saying used to be the consumer of last resort was the American, and we certainly can't say that about Germany, for example, nor China, where rates of savings have historically been very high. Consumption has been weaker than it has been in the U.S.
Yeah, and we're already starting to see some sort of early victims as the tariff pain bites, and one of those has been German cars. I showed a chart earlier about the valuation of European car makers on the Stock 600 dropping quite significantly. You said that there's no replacement for the U.S. consumer, but in terms of German cars, could the Chinese market in any way make up for any sort of pain that they get from breakdowns in relationships with the U.S.?
Well, it might help cushion the blow, and this is not something new. Germany has been for a long time reorienting some of its trade patterns toward China. The growth in exports to China for a decade have been very strong, and the Chinese do buy a lot of luxury goods, including German cars. But once again, the United States is at a much more developed stage, and that just means its consumers have a lot more money to spend than the Chinese do. So even though China is an important source of growth for German car makers, it's certainly not going to replace the United States. So Germany is going to have to, of course, remain very concerned about that relationship with the U.S. and also how those tariffs on German cars play out.
What next are you looking for, David?
Really, in terms of this trade war, we probably want to see, the immediate effect of all this. Is it going to start showing up in the economic data? Essentially, what this is for consumers around the world, particularly U.S. consumers, it's going to be a shock to real income. So they're going to have to pay higher prices. So inflation's going to go up, and they'll be able to buy less. Very similar to what happened in the U.K. after the Brexit referendum, and the pound went down, foreign goods became more expensive. It'd be similar to what would happen if oil were just to spike, consumers have less money to buy other things. So we'll want to see what the effect is on the economy in the U.S. and elsewhere. But fortunately for the U.S., the U.S. economy is going into this in a very strong position, and also we've got this big fiscal stimulus coming up. So if there's any time this has to happen, you'd want to go into something like this in a period of strength.